The earnings season has kicked off while the message of the Fed for fewer rate cuts and rates remaining high for longer seems to have started to impact the markets, and Elon Musk seems to have made some comments making Tesla shareholders feel awkward. In this report, we are to discuss the earnings release from big banks, the Fed's message, and Tesla's updates, and for a rounder view, conclude with a technical analysis of the S&P 500. One of the highlights of the past few days may have been the release of the earning reports of big US banks. We make a start by noting that JP Morgan and BlackRock reported better than expected earnings per share and revenue figures. On an annual level, we note that Morgan Stanley and Goldman Sachs have reported the lowest level of profitability in 4 years, highlighting the downsizing of investment banking in the past year. In an aggregated manner, the releases tend to send mixed signals about the situation in the US banking sector and the conditions in the US financial environment, which more or less failed to excite traders and lead the markets to a more risk-taking approach. We had already expressed our worries in a number of past reports about the divergence of the market expectations for extensive rate cuts in 2024 by the Fed and what Fed policymakers were saying. It should be noted that the market expects the bank to deliver 625 basis points rate cuts in the current year, starting from March onwards. It should be noted that the US employment market remained relatively tight for December, while inflationary pressures in the US economy remained resilient for the same month. Both releases could be adding pressure on the Fed to keep rates at high levels for longer. It should also be noted that Fed policymakers have made statements since last month, actually warning markets that the pace of rate cuts may be slower than anticipated and that the bank may begin cutting rates at a later stage than expected. Should Fed policymakers continue to repeat their warnings in the next few days, we may see the US equity markets dropping as the market may be forced to reposition itself. A firestorm was instigated among market participants and Tesla investors in particular about Elon Musk's controversial comments yesterday. Elon Musk stated on X, "I'm uncomfortable growing Tesla to be a leader in AI and robotics without having a 25% voting control enough to be influential, but not so much that can be overturned. And unless that is the case, I would prefer to build products outside of Tesla." Mind you that Musk currently controls 30% of the share capitals after selling shares to fund the buying of Twitter and paying tax obligations. The statement tends to set the technological edge enjoyed by Tesla into doubt, in our opinion has a blackmailing element including for existing Tesla shareholders. The statement could fundamentally weigh on Tesla's share price, yet it may also serve as a prelude to Elon Musk's intentions to rebuy shares of Tesla, which could turn the share's price higher. S&P 500 seems to have hit ceiling at the 4,795 resistance line over the past few days, forcing the index to stabilize by breaking the upward trend line, guiding it from the 27th of October until the 2nd of January. Please note that the 20, 50 and 100 moving averages continue to point upwards, implying a bullish movement. Nevertheless, for the time being, we tend to maintain a bias for a sideways motion of the index between the 4,795 resistance line and the 4,660 support line that prevented the index from falling on the 5th of January. It should be noted that the RSI indicator is descending, nearing the reading of 50 and implying that the bullish sentiment of the market seems to be fading away. It's also characteristic how the Bollinger Bands narrowed, implying less volatility that could allow the sideways motion to be maintained until the market makes up its mind for the direction of the index's next leg. Should the bears be in charge of the index direction, we may see S&P 500 breaking the 4,660 support line and take aim of the 4,540 support level that held its ground from the 21st of November until the 7th of December last year. For a bullish outlook, we will require the index's price action to clearly break the 4,795 resistance barrier, with the next possible target for the bulls being set at the 4,950 resistance level. Yet we have to note that the R1 is near all-time high levels that may cause some hesitancy on behalf of the bulls to proceed. As this report concludes, we would like to thank you for being part of our financial updates. From all of us here at IronFX, we wish you solid trading.